Hello everyone, and welcome to Wealth Chronicles. Let's talk about one of the most powerful forces in personal finance, compound interest. Albert Einstein allegedly called it the eighth wonder of the world, and for good reason. It's a simple concept that can transform your financial future if you know how to use it. Okay, let's start with the basics. Compound interest is when your money earns interest, and then that interest earns more interest. It's not just your initial investment working for you, but the earnings on your investment start to grow exponentially over time. Imagine planting a tree. At first, it's just a small seedling, but with time, it grows and eventually it produces fruit. Over the years, those fruits produce seeds, and those seeds grow into more trees. Soon, you have an orchard. That's compound interest in action. Your money grows faster as time goes on. Here's the catch. Time is the most critical factor in making compound interest work for you. The earlier you start investing, the more time your money has to grow. Let's take an example. Suppose you invest $10,000 today at a 7% annual return, which is roughly the historical average for the stock market. After 10 years, your $10,000 will grow to about $19,671. But if you leave it untouched for 30 years, it will grow to $76,122. That's more than 7 times your original investment. Now, imagine you add to that investment regularly, say $200 a month. Over 30 years, at the same 7% rate, you'd have $244,000. The lesson here is very clear. The longer your money stays invested, the more it grows. Here's a quick trick to estimate how long it takes for your money to double. It's called the rule of 72. Divide 72 by your annual return rate. For example, with a 7% return, it takes about 10.3 years for your money to double. If you can achieve a 10% return, your money doubles in just 7.2 years. So, how can you put compound interest to work for you? Well, here are 3 steps. Start now. Whether you're 20 or 50, the best time to start is today. Even small amounts can grow significantly over time. Invest wisely. Focus on investments with historically strong long-term returns, like index funds or ETFs. Avoid overly speculative investments that can wipe out your gains. Be consistent. The secret to building wealth is consistency. Set up an automated system to invest regularly, whether it's monthly contributions to a retirement account or a brokerage account. Now, let's look at the flip side. What happens if you delay? If you wait 10 years to start investing, your $200 monthly contributions at a 7% return will grow to just $122,000 after 20 years instead of $244,000 after 30 years. That's a massive opportunity cost, all because of 10 years delay. Lastly, and this one is very important, remember that compound interest can work against you too, especially with debt. Credit card debt, for example, compounds quickly. At a 20% annual interest rate, a $5,000 balance can grow to over $12,000 in just 6 years if left unpaid. That's why it's critical to pay off high-interest debt as soon as possible. Compound interest is a simple yet powerful tool that can secure your financial future. It rewards patience, consistency, and time. By starting today and staying disciplined, you can harness its power to build wealth and achieve financial freedom. So, whether you're saving for retirement, a home, or just a rainy day, remember, every dollar you invest today is a seed for tomorrow's orchard. Start planting those seeds and let compound interest work its magic. Thanks for watching, and I'll see you next.